Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's discussion with you. As we begin this episode, let's take a look at the current state of the market. The S&P 500 has been performing well, wrapping up August with 5 closing highs for the month and raising its total to 20 closing highs for the year. This is certainly a positive trend, but it's essential to consider the broader context. We've seen some notable gains in various sectors, with materials leading the way, up 5.9% in August, and utilities bringing up the rear, slipping 2.03%. However, it's crucial to remember that past performance is not necessarily indicative of future results. One story that caught my attention recently is the virtual meeting among members of OPEC+, where Saudi Arabia aims to continue unwinding the group's pandemic-era production cuts. This could potentially lead to further imbalance between supply and demand, affecting oil prices. West Texas Intermediate fell about 3% for the week, to just above $62 a barrel. We'll also be keeping an eye on the earnings reports from various companies, including Casey's, Rubrik, Synopsys, Chewy, Tsakos Energy Navigation, and Adobe. These reports can provide valuable insights into the health of these companies and their respective industries. It's essential to approach these developments with a critical and nuanced perspective, considering both the potential opportunities and risks. As investors, it's crucial to stay informed and adapt to changing market conditions. We'll be exploring these topics in more depth throughout this episode, and I'm excited to share our analysis with you. We'll discuss the implications of these events on the market and provide guidance on how to navigate the current landscape. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. I'm your host, Louis, and we're glad you're joining us again for this middle segment of our show. Today, we're diving into the fascinating world of cryptocurrency and its ever-evolving landscape. From regulatory debates to innovative investment strategies, there's a lot to unpack. First off, let's talk about the recent developments in crypto regulation. We've seen some significant moves from lawmakers, with Senate Republicans introducing draft legislation that aims to oversee the crypto market through the Securities and Exchange Commission, SEC. However, not everyone is on board with this approach. Senator Elizabeth Warren has expressed concerns about the bill, citing 5 major flaws that could leave investors vulnerable to greater volatility and even financial meltdowns. On the other hand, we have the crypto industry itself pushing back against certain aspects of the legislation. The DeFi Education Fund, along with over 100 organizations, has signed a letter arguing that software developers should not be treated as money transmitters. It's clear that there are many different perspectives on how to regulate this rapidly growing market. Now, for those who want to get in on the crypto action without directly buying cryptocurrency, there are alternative options available. The Bitwise Crypto Industry Innovators ETF, BITQ, offers a way to play the crypto economy through companies deeply tied to the ecosystem. This ETF focuses on pure plays, crypto firms, and large-cap companies with significant crypto initiatives, aiming to balance sector sensitivity and risk. Our analyst friends over at Node Analytica Research have taken a closer look at BITQ and recommend a tactical buy approach, accumulating shares on pullbacks during this sustained up-beta trend regime. Of course, as with any investment strategy, it's essential to do your own research and consider multiple viewpoints before making any decisions. As we navigate the complex world of cryptocurrency, it's crucial to stay informed and adapt to changing market conditions. Whether you're a seasoned investor or just starting to explore the crypto space, there are opportunities and challenges waiting around every corner. Stay tuned for our final story of the day, right here on the Riskwiser Zone. We'll be discussing more updates from the world of finance and beyond, so don't go anywhere. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a closer look at the latest developments in the financial markets. As we've been discussing, the recent jobs report has sent shockwaves through the economy, and investors are taking notice. It appears that the labor market is flatlining, with risks of a potential recession back in focus. This has led to a shift in tone, with investors starting to price in slower growth and a less robust earnings backdrop than initially anticipated. The Federal Reserve is now under pressure to protect the economy with rate cuts, which could have significant implications for the markets. We've seen a fresh appeal of U.S. Treasuries, with the 2-year yield hitting a new 1-year low and the 10-year rate at its lowest since April 4. This could reflect a move by investors to lock in yields while they still can, as the Fed cuts rates. However, it's essential to consider the potential reinvestment risks down the road if yields rapidly dwindle. On the other hand, some experts believe this is just a soft patch for stocks and see it as a buy-the-dip opportunity. They argue that stimulus from Trump's signature tax and spending bill, combined with Fed rate cuts and clarity on the tariff front, could drive stocks higher in 2026. As we weigh these differing perspectives, it's crucial to remember that investing always involves risks and uncertainties. It's essential to stay informed, diversify your portfolio, and adapt to changing market conditions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.